The next thing we are going to learn about in relation to e-commerce, databases, and websites is something called the dot-com boom. The dot-com boom. The dot-com boom. That's actually almost like a rap song or something. And here is a graphical image of the dot-com boom. The dot-com boom. The dot-com boom. And what is the dot-com boom? Well, the dot-com boom is an economic bubble. What is an economic bubble? Economic bubbles are also sometimes referred to as speculative bubbles, market bubbles, price bubbles, financial bubbles, speculative mania, or a balloon. And this is basically an image, a graphical representation of stock market data from 1994 to 2005 of what an economic bubble, a speculative bubble, a market bubble, a price bubble, a financial bubble, a speculative mania, or a balloon is. And basically what it is, it's to trade in high volumes at prices that are considerably at variance with intrinsic values. So one of the most famous speculative bubbles or market bubbles is the Tulip Bubble. And if you just go to Google and type in Tulip Bubble, Tulip Bubble, Tulip Bubble, Tulip Mania, right? Here's another Wikipedia page. And in the 1600s, people in the Netherlands went crazy for tulips, and tulips kind of became highly overvalued. And so the way a market bubble would work is like one guy is like, man, tulips are crazy. They're selling for $2 a tulip now. So I bought a bunch of tulips, and the next day they were selling for $4 a tulip, and I doubled my money. And he tells a friend that. So then the friend goes out and buys a whole bunch of tulips for $5 a tulip. But then on the following day, he sells them for $7 a tulip, and he tells 10 of his friends. So the next day, his 10 friends go out and they buy, a bunch of tulips for $9 a tulip, and the following day they sell them for $15 a tulip. And now people are going crazy because all you got to do is buy tulips, and on the following day you can sell them again and double your money or make a significant profit. And so that's a market mania or a bubble, an economic bubble. And that's exactly the kind of psychology that leads people to speculate and continue investing as values go up and up and up. So the stock market, the way the stock market works is companies go public. They have an initial public offering, and they release stock to the public, and then that stock can be bought by the public through stock brokers. And that's a way for me to invest in a company. So if I bought a share of this company's stock at $1,500 right here, let's just pretend this is a graph for one company, or better yet, this is a market index, right? Like this might here be the NASDAQ, or let's just say it's the NASDAQ. And so, or the Dow Jones Industrial Average. This might be the Dow Jones Industrial Average. Potentially. No, it's probably the NASDAQ. All right, so let's say this, I'm just looking at the numbers. This is the NASDAQ, and I buy the NASDAQ right here, and the NASDAQ is a collection of different stocks, and so it's just a measure of the market, and you can buy that, and you can say, I'm buying it at 1,500. Well, if I'm able to sell it right here at 3,000, I doubled my money. So that's how the stock market works, and it's a lot like gambling, and I've never made any money in the stock market, and I got my MBA in finance, and I studied this, and I don't know, it's just like being in a river or something, and it's crowd forces, and there are good principles. I graduated top of my class in finance too, and I've never made any money in the stock market. So I think it's an interesting place to invest your money. I prefer more real assets like real estate, where I have a little bit more control. Not that I've made any money there either, but if I had money, that's where I'd be putting it. So here's a bubble. And if I bought this at 1,500 and then sold it at 3,000, I doubled my money. Well, somebody could have bought it at 3,000 and sold it at 4,500 and increased their money quite significantly too. And so what happens is people hear about people investing and making money, and investing and making money, and investing and making money. And so they buy, and then they sell, and then they buy, and the price just keeps going up and up and up. And then finally people say, wait a minute, this is like so overvalued. Look. Right, we're at 5,000, and just 4 years ago it was selling for 1,000, and this is really only supposed to be worth about 1,200. I'm not paying 5,000 for that. And then everybody's like, oh my God, we were paying 5,000 for it, and they all sell, and it crashes. And then people go, wait, no, maybe not, and they buy again, and then it crashes again, and then they buy again, and then it crashes again. And so people are just like making and losing money all along this cycle. And generally speaking, If you're a novice, you're losing money. Though I did know one guy who bought a whole bunch of stock and sold it like right around here and made a couple, like $500,000 and bought a beautiful house. And there are lucky stories like that. So that's an economic bubble. And this was the dot-com bubble. This is a chart of the dot-com bubble. So the internet was invented, the World Wide Web was invented right around here. And then people started, becoming aware of websites right around here. And then companies started going public with them. And the world got all excited about this World Wide Web thing. And everybody was starting internet companies. And the prices just went, yeah! And then everyone went, ah! And it crashed. And people made money and they lost money. And so this is really a graphical representation of the world getting excited about the World Wide Web and how cool it is and all the businesses there because this market bubble occurred. And by the way, these market bubbles occur all the time. You might think people would get smart to it and stop it, right? But here after that one, if we look at the real estate market, just looking for a good graph here. Dun, 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 dun. Real estate market graph. That's a pretty good one. That's DC. Japanese, United States real estate market graph. Take a look at that one. Take a look at that one. Take a look at that one. See what these look like. 1963 through 2010. So here you can see, got a little bit overexcited with prices right there in the mid-2000s. That's kind of what I was looking for, house prices, right? So here are house prices over time. You can kind of see the projected line. And we went off the projected line right there, right? But then it's kind of corrected. Yeah, so that's kind of how that deal works. Here's another graph of it that's a little bit more pronounced. And another one. All right, so those are market bubbles, economic bubbles, just something to know about. And you can look back to see some of the commercials of that day and age. I can't believe it's been that long. But here's like an E-Trade secretary. So you can look at that commercial. And she was like, the intent of this commercial is like, she's making millions of dollars, right? So you can go to YouTube and watch the E-Trade secretary commercial. And then here's the E-Trade chip commercial. So when the entire thing went bust, they made this commercial where it's like, oh, you should invest wisely, you're bad. And then if you look for the failed dot-coms list, there's been a lot of these dot-com companies that failed. Webvan, which was going to do your grocery shopping for you, Pets.com, Cosmo, Flues, eToys.com, hammered in hard, Boo.com, MVP.com, Go.com, which is a Disney company, Kaibu, and then GovernmentWorks.com. And if you go to YouTube again, you could search for startup.com, and this is a documentary about one of these startup companies, governmentgov.com, that was going to do, help you do your forms and everything for the government. And startup.com is just an interesting video if you wanted to watch one. It's not great, it's just interesting. So that's kind of cool to check out. All right, so that's a little bit about the dot-com boom, the dot-com boom, the dot-com boom. And, it's good to know about just the history of e-commerce websites and doing business online and how we got super excited about it at the turn of the century and then how the market completely crashed, how there's this economic bubble. And you should know about the dot-com boom, so that's why we have this video.